Bismillah ar-Rahman ar-Rahim and Assalamu alaikum. First of all, I'm really sorry that I could not be among you physically because of my other commitments, but I hope to be with you, inshallah, next time. I would, on behalf of the World Bank, I would like to share some thoughts on Islamic finance with you. You may be aware that World Bank has quite a long history of involvement in Islamic finance, which goes back to several years. Our involvement in Islamic finance was initially started as many publications, organization of events, seminar, conferences, and other technical assistance to our member countries. But it was not till early 2012 or so that we started to get a bit more interest by our member countries who are interested in Islamic finance, as the Islamic finance was growing very rapidly globally. So as a result of that, World Bank, with the help of the Turkish government, decided to open a World Bank Global Development Islamic Finance Center based in Istanbul, which was inaugurated by the president of the World Bank, Dr. Jim Kim, in October of 2013. This particular center has various objectives to achieve. It has many goals, but primarily there are three main goals which we would like to achieve. First one is that the center itself serves as a knowledge hub, focusing on generation of new knowledge on Islamic finance, whether it is banking or capital markets or whether takaful or any other related area. It also serves as a organizer of several international conferences in different countries, which are done to generate new knowledge on Islamic finance. The second objective of the center is helping our member countries with their questions on the policy making, on the legal and regulatory framework, and understanding how it impacts them, how this market can be developed, and our main focus is that how Islamic finance can be leveraged for the economic development of any country. And we believe that there is quite a bit potential which can be exploited as any other tool of the development. So as part of our second pillar, second goal is to help our member countries with the development of Islamic finance in their countries in different aspects, and again that covers capital markets, banking, as well as insurance and non-banking financial institutions. Our third objective is to help our countries, or as a globally, try to be a market maker or market developer. In this aspect, you may be aware or may be happy to know that World Bank has issued a couple of Islamic bonds and helped them. Both World Bank as IFC has developed these transactions. We have also done some lending in different countries where the lending was done on Sharia compliant fashion for the development of SME finance. So in that way we have been working with our member countries with the development of the markets and actual transactions. Now, I think a couple of questions which are come up. First of all, people ask that what is the World Bank's interest in Islamic finance? And as I mentioned earlier, that World Bank consider Islamic finance as a potential contributor to the long-term economic development, and this is based on, I think, three different reasons. The first reason is that the whole idea of Islamic finance, which is based on a risk-sharing finance, which means it doesn't deal with the interest, but depends on the risk-sharing and profit and loss sharing. That finance itself is quite a dynamic idea, which can help countries or the businesses tapping in a new way of doing finance. Now, many studies have shown that a financial system which is based on risk sharing would probably be more stable, and it has many benefits, and it will be less prone to any financial crises. So that of course helps in the long term development. Second issue is that Islamic finance, because of its principles, also promotes an asset-based finance, which means that finance is not only for the sake of financing, but it has to involve with the real sector, and that has an element of materiality, that finance has to be based on creation or the enhancement of an existing asset, and that has a very kind of, again, has consequences that it eliminates or reduces the possibility of creating excessive debt and excessive any kind of a leverage. Again, studies have shown that this element of asset-based finance also is a major contributor in developing a more stable banking system or more stable financial system. The third interesting area is financial inclusion. Again, the ideas of Islamic finance in terms of having a social and economic justice leads to a wider financial inclusion. Islam has certain redistributive instruments, just like zakat, waqf, and qarz hasan, which can be used for enhancing the financial inclusion as well as for alleviating poverty by providing easy and affordable financing for the poor people. So, in that sense, we believe that Islamic finance has a quite a potential for making a very valuable contribution to economic development. I think the next issue is that how do we achieve this potential? And for that matter, there are many. First of all, there needs to be a very solid ecosystem, which includes legal and regulatory framework, a very strong institutions promoting the basic tenets and tenets of Islamic economics and finance, and then gradually that ecosystem can be developed, provide as a foundation, and that ecosystem should not only be focusing on banking, but once you have a banking started, you need to develop the capital markets, and you need to develop the takaful, which is insurance, and as the result of that, a full-fledged financial system can emerge out of it. So I'm very confident that I'm very pleased also that Morocco has taken the first step by granting licenses to participation banks, which is of course I think is a very good step in the right direction, and hopefully gradually once these institutions starts operating and they provide successfully the financing, the other sectors, which is capital markets and insurance, will also emerge. I think a couple are based on the experience from other countries. Two things also needs to be done. One very important thing is taking care of financial literacy. What we have seen in many other countries, people do talk about Islamic finance, but in general, people do not have a very good idea of the very basic principles of Islamic finance and how it works. People may think that Islamic finance is something a very out of this world or very different, but I would beg to differ with that view, and I would argue that Islamic finance is just another form of a structured finance, and any financial engineer who's given a certain parameters can create a product which will be fully compliant with the Sharia. So in that sense, Islamic finance is another form of a structured way of doing financing. For that matter, the financial literacy is very important, understanding the basic ideas and basic contracts. Once that thing is done, then there will be you can see much more advanced financial products could be created. And I think another important aspect for the countries which are new to embarking on Islamic finance is the development of human resources. That is very important, but but I think over there I would say that Morocco is in a much better shape because it has a very good academic system. At the same time, they can benefit from already the literature already available or the advancement done in other countries, and they can easily learn from those developments rather than trying to learn from scratch. So with these thoughts, I would, again like to congratulate Morocco for taking the first step of getting into the market of participation finance, and I really look forward to again keeping our engagement. And I wish you the best of luck with the event and with Islamic finance. Thank you so much. Assalamu alaikum.